Welcome back to 3 at 3. Every business day at approximately 3 p.m. Eastern time. And we do that so that you still have time to trade it. We give you unusual option activity that we have found during the day. Some days, like today, I'm on the halftime report talking about it. And other days, none of us are on. But nonetheless, neither my brother Pete nor I are on certain days. But we are happy to share 3 at 3 with you every business day. So let's get to our first slide, which is, as usual, a disclaimer, which says that every option is a risk asset, that all investments involve risk, and that what I'm about to present to you should be taken as educational and informational only. Also, we have intellectual property rights that are, but not limited to, copyright, trademark, patent, and registered marks. Almost everything you're about to see in this presentation, we own some form of intellectual property on. So I would encourage you to ask us before you reproduce it. If you're just talking about passing it on through Twitter or Instagram or LinkedIn or Facebook, no problem. But if you'd like to use it in a presentation, we'd like to hear about that. And we would like you to cite Market Rebellion as the source of that information. With that said, let's go to the first trade, which is FireEye, one that I bought during the halftime report today. I talked about it as my final trade. And the reason for it was 5,400 of those 19 calls in regular May expiration were accumulated. Now, so this is a in the money trade. I think most of you understand, but bear with me for 20 seconds. In the money means that you've got an option that gives you the right to buy the stock at 19 with stock trading 1948. That is 48 cents in the money, ITM. And at the money would be if it was trading at the same price as the strike price. The strike price of the option, if it were 1948 and the stock's 1948, congratulations, it's the at the money option. And what I normally do is try to buy those at the money options and sell a higher strike against it. Don't need to in this case. I'm buying an option that's in the money and selling a higher strike against it for FireEye. And this shows us from 2021, beginning of the year, as you see there, the stock was 24 bucks. It bled off all the way to a low of approximately 18.20 or thereabouts. And right now, it's pushing the highs of the day over 2017, I believe, $20.17. So let's say it's up somewhere in the neighborhood of 70 cents from when we cited the activity right at about the time of the halftime report, which I think since it was final trade, that would have probably occurred at about 12:30 Eastern time. Final trade happens, of course, at the end of the day, which end of the broadcast rather, which would be like 12:59 East Coast time. So anyway, that is the first of our 3 at 3, FireEye. I am putting in a plug for our daily Crypto Bite show. We certainly appreciate all of you who tune in. Tens of thousands of you do that every day. It is completely free. We stream it to many of the platforms such as Facebook, LinkedIn, Instagram, Twitter, and we put it up on YouTube as well. Make sure that if you want to follow cryptocurrencies and altcoins, not just Bitcoin, that you tune into that at 10 a.m. Eastern time, every business day, 10 a.m. Eastern. If you'd like to try the chat room where our guys are going back and forth with thousands of investors about which altcoins are showing the most promise at that moment, and any questions you might have, charts, all the rest, they do that in the crypto room 24/7, literally 24/7. And you go to marketrebellion.com, type in /try crypto, and you can try it for $1 for your first month, just $1 for the first month. Now, if you like it, it's 29 bucks after that. So it's less than $1 a day because, as I said, it is 24/7. So we have it available 24 hours a day, 7 days a week. And we do have people that staff it 7 days a week. All right, let's get to the second of our 3 at 3. And that trade is Keurig Dr Pepper, KDP. So stock's $35.50. They're buying 4,500 of the July 37 calls. We bought those calls, not the 37s, because again, I like buying the at the monies. Why do you like doing that, John? I like moving the odds into my favor. I'm not asking for as much of a leap, even though these are out in July. I'm not asking for as much of a leap because I'm trading something that's at the money versus something that's out of the money. And I'm selling an option as it rallies. I will sell higher strikes against it. As you see here, it has moved up slightly. I mean, it was 35.50. It is now, 35.75. And so we added 25 cents to the stock. The options are what I'm focused on, of course. The high of the day is 35.89. And as you see, we are on the upper end of the band right now for the range for Keurig Dr Pepper. That arrow is telling you that you should subscribe to Market Rebellion on YouTube. It is completely free. We put up virtually all of our videos on YouTube. We have a very active community there on YouTube, and we certainly appreciate all of you who support it. So you can go to YouTube, type in Market Rebellion, and click on subscribe. Next thing you know, you're in. And if you click that little bell next to the subscribe button, you'll get an alert every time new content goes up, which is probably 3 or 4 times a day. We put up new content on that site. So tell a friend, check it out. We got Pete's the Take, which happens at 10:30 Eastern time every business day. We've got the Daily Crypto Bite, which I just described moments ago, where we talk about the best opportunities in crypto that day. My 60-second video, as well as this 3 at 3. And then we do more. We have roundtables. We've just signed up Leon Cooperman for an upcoming roundtable. We've had Tony Dwyer. We've had Kevin O'Leary. We've had Fun Strats, Tom Lee. We've had so many smart analysts and traders on our Bill Fleckenstein, one of the best guys in precious metals. So if you'd like to join us and you can't make the actual roundtable, bang, you can see it on our YouTube channel. And the third trade of our 3 at 3 is ServiceNow. Now this one collapsed from 557 down to 512. We bought it. I bought some stock. I've already scalped the stock, but I'm in call spread. They were buying the 530 calls. And again, anytime you get to a big, expensive situation like a $500 stock, it's 512 when we saw this, you can see why people would trade the options instead of the stock. In many cases, the options are as expensive as many of the stocks we talk about. I think in this case, the options might have been $30. So they're out there several months into the future because you've got May, June, July, August, 4 months into the future. And if you were to plug in, roughly 2% interest rate and see how much would it cost you to carry a $500 stock for 4 months, divide, basically 4 times 30 or 120 days by 360 and figure out the interest you'd have to pay to carry that stock. That's all part of the equation that goes into how these options are priced. So when you see that somebody's buying the 530 calls rather than the 500 stock, you can see why. 1,000 shares of this is a house. 1,000 shares of ServiceNow is $500,000. But you could own the options for probably, like I said, $30, which is 30,000 on a 10 lot. And you could sell a higher strike against it and take that down perhaps to under $10,000 for a 1,000-share position versus 500,000 if you bought the stock. You get the idea. It is a better use of your funds, and you can define your risk when you enter it. Be ashamed to wake up today with the stock up there and seeing a huge $50+ loss, wouldn't it? So there I am talking about it on TV. There you see that it traded next to nothing up until now. And stock has pulled back after being up at 530.80, because it did pop all the way up to there, has now pulled back to that same 512 range where we bought it this morning. So be aware, these options are not fast time decay, but they are expensive options because, like I say, they're going to trade for, if you're buying the 520s, they're going to trade for more than $30 probably. If you would like to learn more about unusual option activity, you can send us at marketrebellion.com/UOA. You go explore there, see what UOA, unusual option activity, is about, and you can decide I'm going to subscribe, or I want something that's not so many trades a day, maybe one trade a day. Maybe I want something that's one trade a week. We have coaches, mentors, subscription products, education, all at Market Rebellion. I encourage you to go there, marketrebellion.com, to check it out. Questions. All right, let's dive in. Questions today, as posted up by our Andrew Coffey. Jack Capitola, his handle is at J_cap36. Still like DraftKings. Yes, Jack, I still like DraftKings. DKNG, I think, is a great stock to own. I happen to have a slight preference for Penn Gaming, but I like DraftKings. I think you probably still see it on my disclosures on CNBC, but I have written calls very aggressively against it. So where does it finally find a bit of a bottom? Well, we're coming down from $64 April 5th or 6th down to where it is now, 57. It did hit a low not too long ago at 54. I don't know if we have to go back to visit that, Jack, but I do still like DraftKings. Moises, let's talk about at Mo, let me try that again. Moises sends us a question from his Twitter handle at MO_A1 trader. And he says, funny that Jon Najarian, you called out FireEye, and I have been in and out of their calls, diamond hands apparently. And I asked my Market Rebels coach what to do with the newest calls, but was shocked when they dipped yesterday, but decided to take another chance, locked in some gains today again for FireEye. Bang. Well done, Moises. I like FireEye, but I like trading it a lot. So that's it's a great stock. I think Goldman and JP Morgan both just reiterated buys on it. So I feel pretty comfortable in this one. Robert Clark asks from Twitter handle at RBC5001, can you explain options so a 5-year-old would understand it? I don't understand them. One of the easiest ways, Robert, to understand options that we generally start with is a put option. Why? Because most of us have insurance on our car. So for instance, if I have, let's say you have a new $100,000 Mercedes that you've just driven off the showroom floor. You're going to want insurance on that car, right? Well, that is the deductible. Let's say it's $1,000 deductible. We both know that if you want a $5,000 deductible, it is less for that because it's so far out of the, somebody else doesn't pay until you've incurred 5,000 of the first hit to that vehicle. That's a lot less expensive than 1,000 or a 500 or a 0 deductible insurance. Now, if you think about it, Robert, you could say, I've got a $100,000 Mercedes-Benz. I want to insure it, and I'm only willing to take $1,000 worth of hit. That would be like buying the 99 puts in Mercedes-Benz. So in other words, if you did that from 99 to 0, you would be able to be protected. If Mercedes, that particular car, got in an accident and it was totaled, that's somebody else's problem. You pay the first 1,000 in losses, plus the premium that you paid for that put, in this case, the insurance. And you end up only suffering that $1,000 of the deductible plus whatever you paid in premium. If you wanted an even cheaper way of doing that, you could buy, for instance, the 95 puts. That's $5,000 deductible for a $100,000 vehicle. So if you chose to do that, you would have the right to put that vehicle to somebody else at 95, and you'd pay a lot less for that insurance than you would for the $1,000 deductible insurance. That's just like it is with options. So if I had Apple, which I did, and if you wanted to protect your Apple, and it's $134 a share approximately last night, you could own a put that was at the money at the 134 strike. You could own a put that's $1 out of the money, like our example in Mercedes, and only suffer the first $1,000 drop in price of Apple, plus, of course, the premium that you paid for that policy. You could buy a $5 out of the money and, for instance, buy the 129 puts with the stock at 134. That would be an example of $5,000 deductible on a 1,000 share position. So that is my best attempt right now, Robert, at giving you an understanding of options. We can cover calls another time. And I encourage you, Robert, to go to marketrebellion.com/get started. And you can see all about all the educational classes we have for options. Well, that's going to do it for today. You can join us at Market Rebellion and be a rebel. We hope you enjoyed today's version of the 3 at 3. And I hope you tell a friend. You want to learn more about Market Rebellion? Again, go to marketrebellion.com/get started. Thank you for joining me today, folks. I will see you tomorrow. But since I've done the halftime the last 2 days, I will not be on the halftime report tomorrow. Thank you. Adios.